Good morning, afternoon, and evening, everyone. This is Ingo Ernst, CEO of Forstop. I'm very excited to be speaking to you today. Thank you all very much for taking the time to attend Forstop's webinar about data orchestration today. We're going to see how data orchestration hubs can help you to future-proof your KYC and risk in one single API. Before we get going, a couple of admin things. If you have any questions, please post them in the Zoom meeting. We are going to collect them and come back to you individually. If there's any interest in the sources of the stats that we are going to mention, please let us know as well. We are going to take up around 30 minutes of your time today. The webinar is parted into 3 different sections, which I'm going to talk about next, give you a high-level overview. We will then do a quick intro of the 2 speakers today, which is myself and our Head of Product Implementation and Innovation, Brian Daly. So to give you an overview, let's start. We are going to talk around, sorry about that, around today's landscape. That's what we're going to start out with. So we give you a high level and in certain areas detailed insight into how the risk industry is actually being affected by the rise in digital commerce, especially as well now through the impact of COVID. We're going to talk about the vehicles of payment that are being used and as well how that impacts the security and risk industry needs and growth. Next up, we are then going to deep dive into the actual center fold of the presentation and webinar today, which is orchestration hubs. We're going to start out high level. What are they? How do they work? And as well, what are kind of the key things that they solve, where we're going to talk about the 3 Fs, as we call them, like fraud, friction, and fees. So later, we're going to talk around that a little bit more, and then we are going to close it off showing how data orchestration can actually benefit you in your vertical with your particular use case, and we're going to show you an example as to how it can be applied. So lots to do and lots to accomplish in 30 minutes. I'm going to get going. Quick intro though, so you have at least a face in front of you once before we get on with the digital world. My name is Ingo Ernst, as I said. I'm CEO and founder of Forstop. I come out of the traditional banking world, now almost 20 years in risk, compliance, KYC, and payment processing. Started at Deutsche Bank, moved on to the acquiring branch of Deutsche Bank. Back then it was called Pago, then Deutsche Card Services. Moved over to Wirecard. That's 10 years ago, so nothing to do with the current situation at Wirecard. Moved over to Latin America, always in the function of handling risk management, setting up compliance workflows, and making sure that the software being used is in line with the operational needs. In Latin America, worked for some of the larger marketplaces, but as well for some of the heaviest data user in the field, which is gaming and gambling. So making sure that we are set up with risk and compliance for those different use cases. And lesson learned there, and the reason we founded Forstop was that there is a big disconnect between the different teams in-house that are handling merchant onboarding, that are handling consumer sign-up, and then all the way to transaction management. So there were different back offices, different APIs, and really never a centralized view of risk. That's why we founded Forstop, and that's why we are integrating best-in-class providers all in one single solution. But next, I'm going to hand over to Brian Daly. I am talking to you out of our Cologne headquarters, where Brian is heading up the London office as our Head of Product Implementation and Innovation. He is going to then, after his introduction as well, dive into the first slides of today's landscape, and then when it comes a little bit around the regulatory frameworks, like he's going to pass back to me. Thank you very much. Excited to get going. Brian, over to you.
Hi everybody, and hello from a very warm and sunny London today. I think it's going to hit 31 degrees here, so everyone's is a bit melting, I think. So a bit about me. I am in the payments industry about 20 years. I started off working in DCC, dynamic currency conversion, literally sticking credit cards into payment devices to test their functionality, and moved on to then setting up authorization systems and working in acquiring banks, issuers, etc. After a lot of time in the payment industry, I noticed or could see that payments and cybersecurity were moving very closely together. And I jumped ship into a quantum encryption company to work on quantum encrypted identities and secure customer authentication and all that sort of stuff, where I could see that the identity on the internet was going to become the driving force behind securing everybody's payments. And along the way, I met Ingo and Forstop, and I thought they had a fantastic product that I felt I could really help and get out to market and make a difference in. So I joined Forstop about 15 months ago now. Okay, so next slide, please, Ingo. So we're quickly going to look at the online payment ecosystem, some global trends, and the impact that COVID has had on this over the last number of months. Next slide, please. So interestingly, almost half or more than half of the global population is now online. And we can see that, as internet usage grows, the move towards fintech usage is expanding rapidly, with like 25% growth in 2018. I think a phenomenal statistic is that there's 1 million new internet users onboarded every day since January 2018. And e-commerce took a lot longer than it was expected to reach this critical mass, where it's now an everyday part of almost everybody's lives. We're talking 15 to 20 years. But the move towards fintechs is going to be much faster, driven by a number of factors. One being, e-commerce has laid the groundwork for the lay of cables and services, the smartphone, and also the actual real valuable use cases that fintechs are delivering. Like online banking is just going to open up the world of e-commerce for so many people that wouldn't have been possible to do it so before. There's also another factor, which is actually this pandemic is increasing the rate of change and making people that may not have done online banking beforehand, or may not have done online shopping like in the supermarket previously, get on board the internet and increase their transactions. So some of the statistics around that are that internet usage has spiked 70% since January this year. Conversion is up around 15%, which is an incredible number given that it's usually around 3 to 4%. And that's a phenomenal number and a real strong use case for businesses moving online. Next slide, please, Ingo. Of course, if we look at what that means in terms of payments, we can see that the expected sales are to grow to $4.5 trillion in 2021. And the clear winners in this space are retail commerce, m-commerce, and iGaming, which in some cases they're doubling and trebling their market value. COVID again is going to have a huge impact on this area, or has had a huge impact on this area, with shoppers giving an £85.2 billion boost since May to May this year, and a 77% year-on-year increase. A very important statistic or figure is that around 60% of consumers will continue to shop this way, at least in the EU, and I would expect globally that figure to be similar. So after the outbreak dies down, you will have around 60% of those people continuing to shop in the way and in the habits they've established over the lockdown period. Next slide, please, Ingo. Inevitably, with the the growth of e-commerce comes the growth of cybercrime. You know, it was estimated that $130 billion was lost in 2018 due to online fraud alone, and it comes from, you know, areas, a mixed set of areas: ransomware, data loss, email compromise, but also importantly is the cost of remediation around those cyber crimes, repaying money, providing fraud screening to clients, but also the fines you will get from the regulators. And I think a statistic that particularly speaks to me from my work in the identity space is that $5.1 billion was lost due to identity theft in 2019. Again, COVID has had a huge impact on that because, of course, during a pandemic, we've seen a rise in businesses moving online, creating new services, and new users go online. That creates an opportunity for cyber criminals to take advantage of those new users. And we can see in the UK alone, the National Fraud and Cybersecurity Centre has stated that there was a 400% increase in cybercrime in March. And phishing attacks, for example, have accounted for 80% of the global attacks this year, and an increase in fraud of 22% during the period of the COVID-19 in the US. So these are all crazy numbers, and Ingo can move on to the next slide and talk to you about regulation.
Yeah, thank you very much. I think some of our heads might be spinning with numbers, so that will conclude kind of the overall stats to a certain degree. I think next up is really one thing that I think we can all agree on, is that the regulatory framework around digital commerce and payments, identity and security is constantly growing and changing and evolving. So I think we all were challenged with GDPR in one way or the other. We have the Payment Service Directive 1, followed by Payment Service Directive 2, fourth Money Laundering Directive, now fifth Money Laundering Directive. And these are some of the large-scale international and global regulatory frameworks that have a big impact in the players in the market in various ways. But there's as well a myriad of local regulatory frameworks and rules that you need to abide by. And what we see with really the e-commerce going through the roof, especially now with people being home a lot more and making use of the internet, and as well with regulations around online usage, around payments, around identity increasing and being changed all the time, we see that the risk industry is really seeing an exponential growth over the next years. So we see here a couple of last numbers that we are going to see the risk industry grow to almost 800 billion by 2024. And what that means is that teams within your organization are being weighed down with having to try to keep up with security, cybersecurity, with compliance and identity topics, even if that's not at the core of what they should actually focus on. And with us, we still see with medium to large client and enterprise clients in all of the verticals that we're active in, an average of 26 days to onboard a business, to complete documents, to find out what the ownership structure is, if there's any risk associated to the UBO or any of the directors or major shareholders, the regulatory framework of those different companies in different jurisdictions is the culprit for that timeline. So automation here is really something that's duly needed, but to automate, you need data, and you need it at the right point from the right provider in the right country. And boarding a single data source is still anywhere between 1 to 6 months on an average, because development queues are tied up with things that are really more around the core focus of the business. So keeping up with that is really almost impossible. And that, for us, is as well the reason for the bold statement that the future of digital commerce and the world really are orchestration hubs, in order to keep up with regulation, in order to make sure that you win the customer conversion game. you need to apply an expert, not only aggregating data, but orchestrating it for you within the workflow at the right point of interaction and as frictionless as possible. So this concludes the first part. I know that we have bombarded you with numbers, but we're now going to get to the fun stuff, actually the product itself. What are orchestration hubs? How are they set up? And what is some of the key differentiator? So I'm going to start up with what is actually the difference between aggregation and orchestration. So aggregation is having a lot of data at your disposal, trying to make use of it and using it to verify your customers, mitigate your risk, and do everything to protect the business while keeping the door as open as possible for good customers to come in. With orchestration hubs, there is really a lot more functionality associated to the orchestration part of the word, meaning you need to be able to set up workflows in real time. Any and all of the data needs to really work together and not as a single point. You need to be able to apply them at different endpoints of the customer lifecycle. Is it at login, at deposit? Is it at merchant onboarding, and so on and so forth? So this is on a highest level how orchestration hubs are different than aggregator, but really what do they solve? And we continue in our sales pitches, but as well in our management meetings, continue to use the 3 Fs. So fraud, you need for merchant onboarding KYB and for consumer verification KYC. You need data, and you need it at the right time to make sure that you are verifying the business and the consumer that you're onboarding, making sure they are who they claim they are, and as well applying individual thresholds or limits to them that might actually push them to spend more money ultimately. At the same time, you need to be dynamic here. You cannot just apply the same construct everywhere, but you need to have different models. You need to be able to change all that in real time and based on the use cases that present themselves to you. So to overcome that friction of being kind of tied down, you need something that is instant, that doesn't need customization, that doesn't need an additional integration or anything of that heavy lifting kind of sort, but something that you can log into, that you can have an instant overview if you have a problem or not. And should you have a problem or could be doing something better, then the system should guide you towards a new and improved setup instantly. And fees, I think it's all coming together when we speak about money. So I think when you have only one integration, only one contract, only have to train your team on one single platform that's continuously evolving, you already see that there's a lot of cost saving involved here. And you do not have an additional third-party management team that you need to have running ongoingly, but you have one single partner. And even all the way to invoicing, once you make use of so many different data sets and so many different workflows, it just becomes quite tough having different providers to follow with the different invoicing structure and pricing models that they have. So I made some incredibly bold statements, now handing back over to our head of product to kind of verify them and explain them. So not an easy task, but over to you, Brian.
Thank you, Ingo. So an orchestration hub generally consists or usually consists of a single API or a set of APIs that group different services together, and a data hub. And a data hub being a place where you store all your data from all the different services and you can access it for your business. But data can be overwhelming on its own. So you need to provide the orchestration level of this, which essentially, as Ingo mentioned earlier, was the ability to be able to manage your data, add value to this data, build workflows from it, and as we talked about already, understand the risk of your clients and use the data to mitigate that risk. So if we go to the data section, next slide, please. So sorry, we're still on data. So enabling endpoints. So being able to enable the endpoint and turn it on and off. An endpoint being a service or a trusted data source that you might want to use, address checking or identity validation, or a selfie provider, for example. Being able to turn these on and off easily without additional integration is key to a data orchestration hub. Being able to decide what region you want these to be valid in or be used in is also very important, because different data sources have better match rates and higher quality data in different regions. Also can come down to cost, that it might be cheaper to use a local source in country than use a global source, for example. And very importantly is also in how do you reduce the friction, and at what touch point do you enable these checks? Do you enable it at the point of onboarding with a document validation, for example, or do you onboard someone quickly and wait till they have built up a certain threshold for payout, for example, or a certain amount of money deposited, and then get them to continue setting up their full KYC profile? Similarly, on KYB, at what point do you do a full credit search or a full UBO search? Is it done at the point of onboarding of the merchant, or is it done later in the process once you determine that they're of the appropriate risk appetite for your business? Next slide, please, Ingo. So on top of all of this, to add real value to data, you need to be able to, use it. So by having some sort of data processing engine on top of it will allow you to add real value. In this case, we're talking about an anti-fraud engine, which includes a massive library of rules that can manage your exposure to risk by configuring risk thresholds and allowing you to score data and set thresholds. When you do the risk analysis, you can determine how a certain rule or a certain check might affect your onboarding processes. And also the deployment of smart technology is also extremely important here. The use of smart rules engines, the use of AI and machine learning and scoring systems, and even as that automation allows you to really add value to the data and really add value to the system, rather than just removing the developer need for masses of integrations. Next slide, please, Ingo. Of course, having all this data and having added value to the data and understanding the risk is not much use unless you can monitor it. So having a broad dashboard level analytics, which provides you a full overview of what's going on within your traffic, is really important. So what's happening on my onboarding? What's happening with my KYCs, my identity checks, my sanctions and PEPs providers, for example? What's happening on my payment infrastructure if I'm using that data orchestration to monitor that? It being real time is extremely important, and also being able to alert in real time. So having real time analytics, but not knowing about it because you happen to be looking somewhere else on your screen or doing another task, you need to be able to get the alerts to you and your team, and to be able to escalate. So management tools, in that sense, when you escalate, you're looking at a case, being able to manage the case, manage the payment, manage the onboarding request through either declining it, determining the risk, adding an additional data check to something, or escalating it to a member of your team to make the underwriting decision, are all real important parts of an orchestration hub. And then finally, we come to reporting. And reporting is also extremely important, because it allows you to report on what do you have stored in your data hub, what customers do you have, what are the patterns within those customer base? Are they all from a particular region? Are they all from a particular type of sector? Being able to download the reports and share them with management is incredibly important, but also being able to create compliance reports so that you can go back to auditors and regulators to say, we've done everything that you asked of us to make sure we're compliant, and also to demonstrate that best efforts have been made. So I think that is the main components of the orchestration hub, all the real important stuff. And Ingo is going to talk to you now about why not all orchestration hubs are the same.
Thank you, Brian. So yes, I think what we see is the word orchestration hub is quite popular. We see some of the big guys in the industry buying up companies or data and trying their best at it. I think we take great pride in having built up the platform with the very idea of making any and every solution usable in a data harmonization kind of way, making sure that you can apply workflows and that you can have a template builder, that you can do it from KYB, onboarding a business, to KYC, to transaction management. So with that statement, we're going a little bit more into detail, and then after that as well into the last section of the webinar, which are the benefits of an orchestration hub, which as well is mentioning one of the use cases. So I'm going to keep this quick. I think we have over 1,800 active API endpoints you can trigger. One of the big benefits of the Forstop platform is being able in real time, without any customization coding or on-site requirements, to check out what works best for you, taking different data sets, different rules, running them in a what-if scenario, meaning what if I would change that data source to this data source, or this rule would be slightly altered. What would have been the result on the last 6 weeks, 6 months, or year of my traffic? So I think this is something that's incredibly valuable, along with creating smart and intelligent water flow logics, meaning that you might actually have a very large risk appetite and really just want to slip through compliance and audits. On the other side, you might want to really be diligent and make sure that you are verifying every customer with a lot of different data sets. So you can do all of that either cost efficient or maybe premium provider driven. This is really up to you, and it is something that is real time, and you can manage it ongoingly, supported by as well decision making from the system that allows you to see, is this actually working? Is this actually decreasing my conversion, or is it helping me to make sure that good customers are onboarded in businesses quickly? So these are some of the high level benefits. We are going to move to the last section. I'm going to keep myself quick here because we are moving over to a use case, and Brian again. I think the benefits, what we see is that while security protocols and verification and identity checks are a bit of an intrusion for customer lifecycle flow, we see that customers are actually dropping off if the onboarding is not trustworthy. So they are used to many different methods from now since years. So moving to the next slide, you see security questions, passwords, one-time passcodes, and even more heavy stuff like the document ID verification, where you are sending in driver license information, or you scanning it with an app, or at the same time you're sending potential utility bills and others. So clients and consumers, and as well businesses, are used to being checked by now. If it's frictionless, if they are able to see that it adds value, that it adds really as well trust into the whole process and stickiness to the brand, if you can create that through like a seamless process, then there's really a big chance that this is not something that is killing conversion, but that is actually helping you to increase your pickup rate. And I think one thing that we see is that agility is everything. Like very close to around 10 years ago, 15 years ago, where the marketing hubs were kind of coming up and driving individual customer experience. Like we see KYC and KYB onboarding and compliance really going into a direction where there is a need to verify a customer or a business, and there always will be, but it needs to be at different touch points. It needs to be individual. It needs to be customized, being able to integrate into any platform, tech stack, and as well pricing models. So, and I think agility in that area is the future of where we're going to go with identity and compliance and KYC checks. Back over to Brian, who's going to talk around kind of some of the different use cases and connecting points, and then we're going to close down the webinar. Back to you, Brian.
Thank you, Ingo. So just to echo what Ingo said, agility is key here. We see that as the internet grows, the services being offered on the internet, the diversity of fintech products being available on the internet, and of course, we talked about earlier the inevitable growth of cybercrime and increasing attacks. You need to have the agility to change how you work with your customers, change how you onboard your customers in different regions or for different products, and also how to respond to rising threats or new attack vectors. So we have a couple of use cases here, which is more around the services that people use us for. But we can look at, there's use cases around CRM and onboarding solutions where we can white label integration solutions so that your KYB onboarding is a white label solution that looks exactly like your interface and takes a client through onboarding themselves, through finding their company details online, entering their company information, KYCing the directors of the business, and even provide information on the UBOs, or us automatically going out to a data source and capturing information on the UBOs. So providing a fully automated solution for clients and your team to reduce the load or cost of onboarding, and also keeping you compliant. We see use cases around payment service providers of all types, being a PSP or PayFac or different ACH providers, where we're seeing the need to KYC the individual consumers and also provide the anti-fraud information. And by linking the KYC and anti-fraud together, you get a real understanding of who's making the payment, their payment behavior, but also their risk profile as an individual. And we also have use cases around the e-wallet spaces, which are an alternative payments around e-wallets and crypto exchanges and crypto payment wallets, where we have a similar use case where the e-commerce, the anti-fraud, and the KYC are all very closely linked together. But if we move to the next slide, we look more closely at the payment service provider use case. Next slide, please, Ingo. So with agility, essentially what we mean is the ability to turn on and off data and turn on and off anti-fraud features as you're required, and also to edit the effect that those features will have on your onboarding policies, your onboarding rates, and even your payment and risk policies and approval rates. So this is an example of a PSP that has operations in both Europe and the USA. But as you can see, they're using KYC and anti-fraud solutions with us. The US and the European divisions have different requirements for checks, and this could be down to the risk appetite of a European business or the US business, the sectors in which they operate, whereas gaming in Europe might be slightly less regulated, or gaming in the US is being newly regulated, so it might drive you to have additional verification factors. Importantly, for example, another example is that PSD2, the strong customer authentication, the much awaited strong customer authentication, is coming into force in December this year. And having the ability to turn on these verification and validation touch points at the time, on the day, and easily without additional integration into a system, and it's all about you just controlling your workflow, is a real benefit of an orchestration hub like 4Stops. So you can see there we've got the ability to turn on 4-digit PIN, device ID, ID selfie, and verification to enable you to meet that regulatory requirement. So you can see that by jurisdiction, by service, by industry type, and by check type, you can turn on and off and create a real diverse set of use cases, and a set of use cases that are, you know, correct for the context in which you're using them. And I think that, next slide, please, Ingo. Yes. So in summary, the four-stop platform is a single API, a single platform, and a single view of your risk, of your risk. It allows you to report on your risk factors, it allows you to build risk queues, and has analytics built in, and allows you to create a complete profile of business or the individual that you're doing business with. I think as founder and original person that determined the real value of this, I think I should hand over to Ingo to talk about the benefits of an orchestration hub.
Yeah, thank you. This will bring us as well to the end of the presentation and webinar. So I think we have covered quite some ground today. So we see that there's very, very different use cases for orchestration hubs. The future is digital. Everybody is moving online and paying online and interacting online. You need a very flexible orchestration hub and system that allows you to be really agile and act in real time, be cost efficient, and as well have your team focus on actually what's your business core and not on compliance and risk. So for us, data is really at the center of all of that. The better you can use the best-in-class provider, the data and solutions that they offer, the easier you optimize things for the customer, but as well for your back office teams, the better. And for us, what we have seen on an overall level is that there's a heavy impact on the different areas of the businesses, from chargeback reduction all the way to increasing conversion and authorization rates, to as well saving costs using the right data sources at the right time. So for us, the future is very, very clearly laid out for orchestration hubs that we are seeing everywhere in the industry, trying to be mimicked either internally or for some of the large groups buying additional data sets. We feel that as an orchestration hub, we're very well positioned, having founded FourStop on the idea of an orchestration hub and going into the market like that since day one. This was really exciting for us to be sharing our vision and kind of our statements around orchestration hubs and how they can future-proof your KYC and risk in one single API. I hope that the next time that we all get to speak is at a conference again, and that we or any other venue that we can sit face-to-face again. If that's going to take a little longer, we're actually going to have additional webinars where we're going to go into use cases in more detail. I want to thank everybody that made this possible today, our CMO and COO who helped as well. Brian, thank you very much for all of your insight and some of the heavy lifting. And last but not least, to everybody attending today, thank you very much. Have a great week and talk to you very soon, hopefully.